Welcome to The Explainer. Today we're tackling the two absolute titans of cryptocurrency, Bitcoin and Ethereum. You know, they dominate the conversation, they dominate the markets, and they pretty much define the vision for a decentralized future. But here's the thing, they couldn't be more different.
You've probably heard this comparison before, right? Bitcoin as digital gold and Ethereum as digital oil. It sounds like a simple analogy, but honestly, it is the absolute key to understanding everything about them, their tech, their purpose, and even their cultures.
Okay, so let's really get into it. Let's unpack what makes these two so fundamentally different. And to do that, we have to start with the original revolutionary idea.
So, picture this. It's 2008. The world is still reeling from a global financial crisis. And out of nowhere, a mysterious figure, or maybe a group, we still don't know, called Satoshi Nakamoto, releases a paper outlining this radical new idea.
The goal, laid out right there in the original white paper, was simple but totally profound. Create a form of internet money that just doesn't need a bank. It was designed to solve this huge computer science puzzle called the double spending problem without any central authority. And in doing that, it created digital scarcity for the very first time.
So how in the world does it work without a bank? Well, it's through a process called mining, which is based on something called proof of work. Think of it like a massive global competition. You've got powerful computers all over the world racing to solve a super complex puzzle. The winner gets to add the next block of transactions to the chain, and for their trouble, they get rewarded with new Bitcoin. Satoshi even compared it to gold miners spending resources to pull gold out of the ground. It's all that energy being spent that makes the network so unbelievably secure.
So if Bitcoin was this brilliant invention of digital money, Ethereum, which came along a few years later, asked a truly groundbreaking question. What else can we do with this amazing blockchain technology?
And right here, this is the fundamental difference. Bitcoin is designed to be static, secure, and pretty much unchanging, like gold. But Ethereum, it was built from the ground up to be flexible. It's more like a decentralized world computer that anyone, anywhere can build on.
And this is the crucial point. This flexibility lets developers create entire applications right on top of Ethereum. We're talking about whole new financial systems, what we call DeFi, the crazy world of digital art and collectibles with NFTs, new ways to run companies with DAOs, and so much more. All of these things need some kind of fuel to run.
And this brings us right back to our central analogy. Bitcoin is a store of value. It's the digital asset you hold on to. Ethereum is the fuel, the digital oil, that makes this new decentralized world actually go. Every single transaction, every smart contract, it needs a little bit of ether, which they call gas, to power it.
Now, this core difference in philosophy, static security versus dynamic flexibility, it leads us to one of the most dramatic and, let's be honest, controversial points of comparison: energy consumption.
So, as we said, Bitcoin's proof-of-work system is incredibly secure. But that security comes at a steep price. By its very design, it requires a staggering amount of energy. I mean, to put this number in perspective, some estimates say Bitcoin uses more power in a year than entire industrialized nations.
Ethereum actually used to run on the exact same energy-hungry system, but back in 2022, it went through this massive, incredibly complex upgrade called the merge. It switched to a new system called proof of stake. So instead of a computing race, proof of stake works more like a security deposit. Users stake their own ether to help validate transactions.
And this chart just illustrates the result perfectly. The change was absolutely stunning. Ethereum's energy use went from being comparable to a mid-sized country to basically that of a few large servers. It just plummeted.
A 99.9% reduction in energy use, almost instantly. So the obvious question is, why doesn't Bitcoin just do the same thing? Well, for the Bitcoin community, that massive energy cost is a core feature, not a bug. It's the work in proof of work, and they believe it's what makes the network so hard to attack and so fundamentally secure.
These deep technical differences also reflect two very, very different cultures and worldviews that have grown up around these things. So let's explore how these philosophies actually play out in the communities themselves.
What's so interesting about this slide is how it captures the cultural divide, and this is described by Ethereum's own founder, Vitalik Buterin. The Bitcoin culture is often defined by this fierce, uncompromising defense of the original idea. They call it maximalism.
The Ethereum culture, on the other hand, is often seen as more about global collaboration, being adaptable, and even trying to work with existing systems.
So you've got these different technologies, these clashing cultures. You'd think they would be pure rivals, right? But when you actually look at how they behave in the financial markets, the data tells a much more complicated, much more intertwined story.
Researchers wanted to get past all the cultural debates and just look at the hard numbers. They analyzed how the prices and volatility of Bitcoin and Ether moved together to really understand their dynamic in the real-world market.
And what they found was pretty fascinating. They calculated that Ether can actually work as a financial hedge against Bitcoin. So what that means is, for every dollar you invest in Bitcoin hoping it goes up, a 42-cent bet that Ether will go down could protect you from some of the volatility. They also found that in an ideal two-asset crypto portfolio, Bitcoin is still the dominant player, making up about 82% of it.
And this chart of their correlation over time, it really shows just how dynamic their relationship is. It swings back and forth, from positive to negative. But the real key takeaway here is that their fates are often tied together. They don't exist in a vacuum. They're constantly influencing each other.
So after all of that, we're left with two clear, distinct, but really interconnected roles. You have Bitcoin, the original idea, the digital gold, that prioritizes security through massive energy use and a totally uncompromising culture. And then you have Ethereum, the evolution, the digital oil, that prioritizes efficiency and flexibility to become this platform for a whole universe of new applications.
Which leaves us with the big question at the end. Are they just rivals, fighting for the same throne? Or are they becoming two complementary, foundational pillars of an entirely new digital economy? The answer, it seems, is a little bit of both. And that's what creates one of the most fascinating and complex ecosystems in the world of tech and finance today.